up. It is creeping upward. We feel and look like we've broken out of that tight band of 100 to 110 on Brent that we saw for much of the first few months of this horrible war in the Ukraine. But now in the last week or so, it feels like it's broken free. There's a new dynamic at play. What exactly is it? Let's go to Andy Levin, COO of Sahara Energy Resources, sitting in Dubai. Andy, have we broken out, and why, and where are we going?
So I think we probably have, unless there's some, although we'll probably find another level of comfort. I think the reality is that people are now starting to recognize that there is no easy way out of the problems we've got. So the Ukraine war is going to continue. OPEC is not going to be able to produce oil if the market comes back. And it's a tough place to be. I mean, there are enormous issues for the globe that we need to be addressing. Inflation. We still really don't understand what's going to happen in terms of food poverty.
Well, that certainly seems to be hitting the agenda in Davos, where Peter Maguire is not, because he's in sunny Australia, CEO of XM Australia. Peter, your thoughts on that idea? We've broken out of this tight range to the upside, not dramatic, but moving slowly but surely. I suppose one of the reasons may be that China looks like it's got a heartbeat again.
Absolutely, Sean, and good morning to my fellow panelists. Greetings from Sydney. Yeah, it certainly has. It's got a heartbeat there. I'm not sure whether it will need ultimate resuscitation, but at the moment, Sean, it's looking relatively okay. The big picture theme coming out of China, but their COVID policy is one that it could run for a new number of months from here. And you've got Brent, as you mentioned, at 114. I take on board what Andy's saying. I still believe it's going to be a 120 handle. It'll be there sometime early June. I just think the overall momentum, summer driving season, that US dollar's come off a little bit, and overall structural weakness maybe for the US dollar. You might see a 101 or a 100 handle back from that 104. So I think the upside's going to be energy. Have a look at nat gas prices, and the overall I think health of the market is a stronger and more robust price in the short term.
Dr. Charles Elinas, CEO of Cyprus Natural Hydrocarbons and Senior Fellow at the Global Energy Center at the Atlantic Council, sitting in Europe. Dr. Charles, the sort of catapult that people were waiting for to sort of send this market, if you like, rocketed to the moon, was the EU oil embargo on Russia, which is looking like a very difficult labor. Your thoughts on where that's at? The market's moving higher even without it so far. Are we going to get it across the line? What are your thoughts?
I don't think so. The heads of state are meeting now, and Hungary is not even prepared to discuss it, let alone, so it's not on the agenda this week. Hungary is saying that there are still problems they are facing. What is on offer is not acceptable to them. They're not prepared to discuss it anymore. So it looks as if this is not going to go anywhere for a while yet. But in addition to that, I think the reason why the oil price is going up is because there are indications that inflation in the US and Europe the growth is slowing down. So they're now seeing sort of a peak in inflation, and as a result, demand may go up as inflation goes down.
I would like to see the whites of the eyes of that narrative. Inflation going down. I can't see that anywhere at the moment.
But it's slowing down, Sean. It's
slowing down. Yeah, it strikes me that inflation continues to. Where was it? There was a story overnight. I think we included it in our digest, that Microsoft announced that they were going to be doubling doubling their salary, their bucket in which they pay compensation in order to cater for inflation, doubling, which is a rather extraordinary number. And where Microsoft goes, of course, everyone else will follow if they want to compete for the same talent pool. Andy Lavin, the dynamic of this market, as we've talked a bit about in recent weeks, has been very much the distillates, the gasoline, the diesel, the jet fuel, less about crude, which was kind of stuck and boring, but ultimately the huge differential between the two. Has that paradigm shifted? Is it shifting? Where do you see that going? You're on mute, Andy, sorry.
So I think the whole market is slowly changing. That's why we see, I mean, if you stand back, we remember enormous amount of volatility and it being stuck in a band. But actually, if you zoom right out, the market has just been slowly going up and up and up and up for several months now. The war and everything created a lot of volatility, but it is going up. I think that what we're seeing is over time almost a reduced necessity for the countries to embargo Russian oil because companies are embargoing it themselves. So you've also got on your news digest UAE crude going to Europe. Well, that's because somebody in Europe wasn't taking Russian oil. So it's already biting. It's just not maybe biting as hard as you would get if the countries actually said no more oil. So I think what you need to look at, especially in Europe, is the amount of products that also come from Russia into Europe, principally the middle distillates. And that's what's really causing the tightness and the change in dynamics around the market. And I don't see that going away because, again, you know, the companies are actually saying, I don't want to be buying Russian products, and therefore I have to pull it in from somewhere else.
And ultimately, at this time of year, Andy, we see the maintenance season ending quite quickly. And with that, obviously, an appetite for even more crude.
Absolutely. No, so I think certainly as you move into the summer driving season in the US, I think there is going to be more demand. And that's probably another element that's just sitting in the background, pushing that market up.
Peter, meanwhile, in China, the government came out earlier this week announcing some kind of stimulus measures, broadened tax credit rebates, postponing social security payments, loan repayments. Nothing too dramatic, but nonetheless pointing in the direction of where they would plan to go. Is that enough? Is that a damn squid? What are your thoughts on these initial soundings of China stimulus?
Well, they're very positive, Sean, from you know, an onlooker looking in, and analysts are saying that that's a general theme that everyone's singing from. So first off, positiveness. Secondly, how long these lockdowns last for and the overall structural strength of the Chinese economy GDP-wise. I noticed that Bloomberg came out last Thursday and they were saying that their bottom tail that they'll see a 2% rise, so a bandwidth from 2% forecast for GDP all the way to 5.5%. So you can imagine there's a lot of
that's a 2022.
That was for the current quarter.
Current
that's
quarter.
Where they're looking. Yeah. So they're looking as far as, you know, that's annualized, but they're just looking at that as far as the weakness that they've seen. Remember, put your mind back. The US outgrew China as far as GDP in the fourth quarter last year. Biden came out and mentioned that in January. So the overall picture as far as growth and how China moves forward, these particular quarters, considering the lockdown from retail sales, and you're looking at supply chains, all of the logistic work across the globe, it's going to be a tough ask, and I think they'll have to do possibly more than the $5 trillion that they've thrown at it so far. They may have to throw a little bit more, and high energy costs aren't helping the situation in China, Sean.
Just a quick follow-up, Peter. In your neighborhood this week, we've had the meeting of the Quad, this sort of new security alignment, sort of a NATO of Asia, if you like, with Australia, the US, India, and Japan, with a new Australian Prime Minister. Is that driving more tension in the region? How do you see the timing for that, and in the context of all the noise around Taiwan and so forth?
Well, I from where we sit in Australia, Sean, we're still a long way south. We're 11 hours by flight to Taiwan, so it's still consideration that we might be in the same geographic slice, but it's a long way away, and we're conscious as far as the China-Taiwan situation.
But of course, you're locked into the security framework, right? I mean,
absolutely, yes.
Regardless
of
India distance.
And Japan, yes.
I mean, Australians came and fought in the Second World War bravely, and in fairness, fair play.
Yes.
So they're well known to travel. Yeah,
we are well known, and they've been, wonderful soldiers for 100 years, since the World War I and even before that. So yeah, I would say, Sean, that there is a level of I think Main Street interest in the whole situation with Taiwan and what's rolling across that frontier. But at the moment, we're just sitting here observing new Prime Minister, first couple of days in, and the overall, I think, mood in the street is one of, sit back, let's have a look and see what happens.
Dr. Charles, in Europe, we have obviously what appears a difficult moment for the EU. In a way, they're finding in this crisis, trying to shepherd Hungary into alignment on this agreement to embargo Russian oil. It's a bit of an outlier. Is that the first fractures? We also have Turkey showing some resistance to Finland and Sweden coming into NATO. Again, the first kind of real fracture in this 3-month conflict in the Ukraine. Your thoughts on those fractures? Can they be fixed, or could they get deeper? How does that feel?
I think the risk is that they will get deeper with the new approach by the EU for getting rid of Russian gas. This new proposal they issued recently called Repower. They are going for joint storage of gas, and they're expecting countries that own the stored gas to share it with others. And that when we come towards the end of the year and they need to share it, if they come to that, I see problems, because the mechanism is not very clear. Somebody who has paid for the gas to sell it to somebody else and not be properly compensated, or not give priority to their own needs. These problems, these divisions are going to increase, not reduce. And Hungary is not on its own.
Is there a few dollars that can solve this problem for Mr. Erdogan and Mr. Orban? I mean, they do like a few £100 million.
Well, Mr. Erdogan...
I mean, he took, what, 3 billion to keep Syrian refugees?
And he's sending them back now. But Mr. Erdogan has a bigger problem. He has elections coming in January. And at the moment, as things look, he is likely to lose elections. So he is going to be taking measures and doing things, not just for a few $1 billion, but to shore up his position. I mean, this week, because the Greek Prime Minister visited the United States and spoke to the joint meeting of the House and the Senate and said, don't sell Turkey F-16s, Mr. Erdogan came back and said, I don't know this guy anymore. I don't recognize him anymore. He's not the Prime Minister of Greece. And he's sending a survey ship into the Aegean to sort of push the Greeks a bit more. So I can see Mr. Erdogan taking tougher views of what is happening around him, but also with regards to Europe, to shore up his position within Turkey for the elections in January.
Andy, it does appear, and we have some commentary out of Davos this week, that the sort of multilateral geopolitical institutions, the UN, the IMF, the World Bank, and I'm not sure if you add NATO, to that, which is, there's been a lot of positivity around the reinvigoration of NATO. Now we're looking at potentially a big fracture with the first real challenge. Same with the EU and Hungary. Are all of these multilateral agencies and their sort of perhaps past sell-by date part of the fracture, part of the sort of uncertainty? And I was curious your thoughts of how they feed into energy markets and pricing political risk.
So I think the reality is, I don't think they're out of date. I think they are searching for what their purpose is in the new world. I think the Ukraine crisis has actually given a recognition that actually they are really important, and they're trying to work out, so what does being important really mean, and how do we do it? So I'm not sure I agree that the fractures will get that deep and be that problematic. I think it's part of growing up as an organization. They'll have to go through these things and work out what it means. It's great to say, oh, we'll do everything the same and all together. That's really tough when you've got a broad set of demographics. So I think that they're discovering and reinvigorating what they need to be in the future. Now, in terms of how that feeds into the oil markets, I think you can see that very much in Europe, right? But again, you've got these two layers. You've got the country layer and you've got the company layer. And at the moment, they're all moving together actually quite consistently. And now what we're starting to see is it's more problematic at the kind of the European level to do everything the same. But the reality is, people are still embargoing Russian oil and gas because their shareholders don't want it or their banks refuse to finance it. So to a certain extent, is it really important? I'm not convinced that Hungary's position really makes much difference in terms of where we'll end up.
Peter, we do have, just sort of following on this theme, which I think is important because fractures in it start to weaken the unravel this sort of foundation on which a lot of economic outlook is sitting at the moment. We've had an Associated Press survey poll in the US overnight coming out and showing that the Americans are becoming less supportive of punishing Russia for its invasion of Ukraine if it comes at the expense of the US economy. We're only 3 months into this, and the expectation is that this grinds on harder. Europe are about to introduce a 6th phase of sanctions next week, whether it includes the EU embargo on oil or not. It's going to include a lot of other things. The appetite sustaining, your thoughts on that and its relevance for the markets?
Well, Sean, first off, building on the comments that Dr. Charles mentioned as far as the inflation curve, and the hurt on Main Street is enormous. You've only got to talk to, I've got different people that I talk to over in the States, and the cost of everything is very sky high in Australia as well. But the fuel costs over there, what they've experienced, natural gas prices, the cost as far as chicken, beef, minced beef, you name it, all the fruits, vegetables, everything is at record highs. And this is the hurt that they're experiencing. And they're all going, well, hang on, Russia's only got stronger. Have a look at the price of the ruble. What's happened there? It's gone from 135 down to what it's currently at 56. And everyone's saying, well, hang on, Russia's doing very, very well. We're being hit here as far as the pump and hurt on Main Street. When do we get a change? And with inflation galloping away, and many are still saying that 10 or 11% is very achievable, then I think it's going to be a very, very tough sell. And the overall mood over this summer period is going to be one of gloom. As we say, are we headed for a recession or something even worse, Sean, come fourth quarter in the US?
Peter, just to follow up on that, I had a pretty good interview, which is coming up after this show. We'll be posting it on Halftime Talk this week with Amrita Sen. And she made the point that Asia is about 18 months behind the sort of Western, with the West, and coming out of the COVID, sort of the economic bump up that we saw, that pent up demand. and they're forecasting that the next 18 months in Asia could be a lot of a release of this pent-up demand and be quite supportive to all things energy consumption and particularly in mobility.
Sure, I absolutely agree, Sean, and I think as long as you don't have further lockdowns and if that, I mean, that's the throw of a dice, a roll of the dice. If we return to the status quo, then I think Asia is going to perform very, very well over the, as you said, over the next 18 months leading up to end of 23. But the issue is how heavily or problematic is the global inflation situation, and there are many Asian countries under the whip. You know, Malaysia and Indonesia and Thailand. We've got teams over there, and I talk to them. They're heard on the street that they're feeling also. So it's not just isolated in the US or Europe with 9% or the UK. It's really a major concern across the globe, this inflation spike and how it's going to be managed and how it unwinds. And if you listen to Lloyd Blankfein, it could be very, very messy.
And all of the central bank governors are certainly talking the talk. Lagarde jumped on the bandwagon earlier this week saying, we're going to do what it takes, that famous line from the former ECB central bank governor. But Dr. Charles, I'd welcome your thoughts on that vis-a-vis the point made about this sort of emerging fracture in the US side, at least from this AP survey yesterday, that appetite to punish and to challenge Russia in order to, and take the economic pain of that. It was one of the first questions we actually asked on this program 3 or 4 months ago when this was all bubbling up. Would there be appetite for the pain? How's that feeling in Europe, Charles? And do you think that obviously it's closer to the front line?
Well, there are already signs that the interest in Ukraine is slowing down. If you look at the news media, if you look at what is covered by television channels, gradually it's very difficult to maintain interest in Ukraine when costs are going up. A lot of the news now is about the cost of energy, the cost of food, and less so about Ukraine. And I see interest in the Ukraine situation slowing down. I mean, it's going too long. It's carrying on for too long. If in the UK, the warning that has just come out is that the cost of energy, even for the lower income households, is going to increase to about £1,800 per year by the end of the year. And that's a huge increase. And between the cost of energy and the cost of food, some households will be paying close to half their money just to keep themselves fed and keep themselves with energy. So in those situations, Ukraine gets further and further away. It becomes stale news. The interest now is survival. I mean, you hear news that 10 million families in the UK had not enough to eat last month. I mean, that's the kind of news that is predominating at the moment, and I'm afraid if Ukraine lasts longer, much longer, it will get lower and lower down the pecking order of news.
Perhaps that's what was in the wider strategy of the Russian government. Okay. Let's go to the survey question, which touches on a little bit of this point I made earlier. Welcome the view of the room on this. The reigning global multilateral institutions, the UN, the IMF, the World Bank, etc., are no longer aligned with the geopolitical balance of power and ultimately could become collateral damage in this big shift that we are currently seeing. That's the question. Agree, disagree? Take the view on that. Andy, we had, as we look here, the sort of the end of May, going into the driving season, Peter had articulated the potential that this movement upward in oil price could be hitting the 120 handle and so forth, even regardless of the embargo that could be announced or some version of one announced. Your thoughts on where the market moves now as we come into the end of May driving season?
So I think it's just going to continue going upwards. I think there's nothing positive in the view out for the next 6 months that's going to push that price down, unless we actually honestly believe that the the war in Ukraine would come to an end, that's about the only thing that's going to push the prices down.
What about the sort of macro idea of demand destruction? We've had the big negative on China, and it still hasn't changed the trajectory on this thing. It's hard to think of anything bigger than that.
So I think that's clearly a possibility. I think the challenge is that demand destruction probably comes because of a much bigger issue than China lockdown. It comes because of significant inflation, people not having food, therefore not being able to buy. So then you have a tsunami of negativity, which clearly nobody wants to believe. Therefore, the market's going to, for the time, will ignore it and will still keep pushing the prices up.
Peter, your closing thoughts. It strikes me, I mean, where do you stand? And we have one of our regular weekly commentators, Omar Naija, who doesn't believe the central bank monetary policy makers has the stomach for the sort of Volcker type scale of challenge here. Your thoughts on that will do what it takes.
Well, I think, Sean, first off, let's see what they are, June and July, and if they are already baked in, and everyone says they are at 50 basis points each month. So there's the first thing. I want to see how their mood is come September. I want to also appreciate Dr. Charles's mention as far as the hurt on Main Street that you're experiencing in the UK, and that will be rolled across to US. The companies that can't afford a pay rise, and they're not a Microsoft. So there's a lot of people falling into that basket, and we're talking possibly tens of millions. So the hurt is going to, I think, with high food costs, high energy costs, and the only good fortune at the moment is that you're really into a Northern Hemisphere summer. So you're not trying to heat houses as much as what you will be in 6 months' time. I just want to see where we are as far as US dollar, where we are with energy over that end of that summer driving season and rolling into September, Sean. It's going to be that volatile. I wouldn't be surprised to see the NASDAQ wipe off another 10 or 15%.
Dr. Charles, last word with you. Let's get the survey result. It strikes me that in so many ways, there's many different pieces of this challenge, this outlook, but it's hard to find any other options as declared there that's going to sort of put a downward pressure on this commodity complex, other than the Fed and the central bank governors are going to have to kill demand. They're going to have to go Volcker.
Well, in Europe, I'm afraid demand is going down. There is demand destruction. I mean, there are now forecasts saying that between this year and next year, the energy consumption in Europe will go down by 3%. But Europe itself is also driving energy consumption down. They are in their new targets in Repower. They say that they expect energy consumption in Europe to go down by 13% by 2030. As opposed to the previous target of 9%. This demand destruction of energy, I think, is going to continue and will have an effect over the next few years overall. But going back to the survey question, I think this realignment we're experiencing now globally with the US and Europe on one side and Russia and China on the other is pounding these institutions. It's making their functioning a bit more difficult, because with the US and Europe in a predominant position, they are using these institutions to curb whatever affects Russia or China. And China is now looking at pulling its money out of international banks to bring it into China, because they're worried that the US may, if there is a conflict, may take their money away from them. All of these things are straining the international institutions. And I'm afraid we are gradually going to a bipolar world with one part of the world dominated by Europe and the US, and the other by China and Russia and everybody else in between.
Yeah, it does feel like that this element, I mean, there's many tangents of this, the overall narrative currently, but the institutions, the NATOs, which are a bit beyond the multilateral agencies, of course, World Bank, IMF, UN are global institutions. NATO is not, EU is not, but they all seem to be under some level of duress. How they perform in these coming period, particularly the EU on being able to push through an oil embargo, or NATO being able to add 2 European countries, will they be able to keep everybody in the tent while crossing these pretty difficult waters? They are imminent questions that will need answers in the coming weeks. And so that could be something, as well as adding to the weight of outlook over the summer. We'll wrap it up there. Peter Maguire, as always, awesome in Sydney. Andy Lavin in Dubai, telling us all as it is and with great insights, and Dr. Charles Elinas from Cyprus and Holland, a nice bridge of 2 places to be based out of. Thank you, Dr. Charles, for your insights as always. And we'll catch up every morning, 10:30. We see Brent trading up this morning, as said, about $1, about 1%, holding firmly above 114. Will it get to the 120 handle by June 1st, as indicated by Peter? We will see. It's certainly moving in that direction. All the best. Thank you very much.
Thank you
Thank
very
you,
much.
Sean. Thank you, Dr. Charles. Bye, Andy.
Thank you.
Cheers,
Thank you,
bye-bye.